Something I know to this conversation, but you watch the markets closely, and it does appear as though there's a little more skepticism lately on what's going on over in Europe. Would you agree?
Yeah, I mean, caution's definitely coming back into the markets because more's needed for stability. So what we're talking about is growth. You know, a lot of investors are concerned, where are we going to see growth from? And we recently saw the German domestic demand disappoint. And that was key because obviously Germany has been one of the linchpins of growth, and if that's struggling due to a strong currency, etc., where are we going to see growth for the region come in? And then we've seen, with respect to Spain and Italy, risk resurgence there. You know, corruption charges within Spain and possibly a hung parliament, an outlook for possibly a hung parliament in Italy. And we still have huge question marks over a banking union, whether they're going to move forward with reform and with unity. And what that means is we feel that markets potentially have, market elation has been a little bit too early, moved a little bit too far, and there are these potholes that actually could cause markets to stumble, at least in the shorter term.
Yeah, it is somewhat surprising how the European market has managed to stay above all of that, right? I mean, it was up again today. Our markets have largely been brushing anything over in Europe off for the last several months. And the question really is, how long can that last from a U.S. stock standpoint?
Exactly. I mean, uncertainty, markets do not like uncertainty. And the longer this continues, the longer the uncertainty is over the markets, the more likely it is that we'll have a pullback. And there's an interesting statistic that's been kind of bounded around about the US stock market, and that's that it's approaching 500 days since we've seen a 10% plus correction in markets. And it makes it the 10th longest time in US history that the markets have gone this time without a pullback. And it means that when we're looking at where valuations are, they're no longer cheap with respect to the US market, no longer cheap. Growth isn't coming through as we thought it was going to come through. And you've got this level of uncertainty, meaning that it is more likely that these momentum followers, for example, the hedge funds that are buying into financials, that they're going to start to stumble.
Josh?
I guess I would want to ask you a question about, don't you agree that we're all aware of the issues in Europe, but hedge funds are now rushing in to take private pieces of debt deals off of the hands of the banks? There's liquidity meeting every one of these challenges. You've got every central bank in the world now emulating the Fed. Forget about the fact that this ends badly and et cetera, but just for the near term, how is it that you think one of these cracks is going to appear and change the game, given that everyone is waiting for that moment to do more buying?
No, I agree, and I do think that means that if we do see a correction, it could be muted because it'll be a fantastic buying opportunity for all those investors that are looking to rotate back into risk assets, because over the longer term, we're actually more bullish about equities. You're in a low interest rate environment, credit spreads are at multi-year lows, and it is a return, we are looking at a return to growth, but what it means in the shorter term, as you said, you know, what could be the potholes? Italian elections, banking union. We still don't have a banking resolution mechanism on the table, meaning that if the ECB takes over, they will not have any authority. We still don't have a single deposit guarantee scheme, meaning that we need to see confidence come back into the markets to encourage depositors to deposit their assets back within the periphery countries, and we haven't seen those asset flows yet. So all of that gives us slight cause for concern, meaning we're growing more cautious shorter term, although obviously more bullish longer term.